uh, with another video, but this one is going to be a lot different in many ways. The focus of this one is going to be on Bitcoin. It is my favorite macro investment. It's possibly, of anything I've ever looked at in my entire career, the most interesting. And I've waited to do something like this until I actually had the tools to do it. And that's one of the things that's great about what you're going to see today is this involves me being able to do storytelling, which combines what I've always done in my content, or anything that you followed, whether it's my writings, my videos, but also podcast. When you take a podcast in writing, it's storytelling, and I use statistics always when I would do those, but without supplying them, which was very difficult. It made it very difficult for people, and I'm sure everyone goes through this listening to podcasts. If you don't have the data, the actual data to support it, and you can't read through it and go do your own research, it gets a little hard because you have to pay attention to everything. What I'll be doing in some things going forward is combining quantitative data. This will have charts and everything like you've seen, but to support the Bitcoin story, you really need to have the qualitative data, because there has to be things that are happening in terms of trends, of usage, of ownership, what the government regulations are doing, what's happening in liquidity. And so as a typical approach to macro, I'm going to try to highlight why at the end of last year, I wrote a paper which talked about 2024 being the Bitcoin moment for a lot of different reasons. I'm going to go through those. And what I'll be doing it on today is something which you'll see me do these videos on going forward. This particular software is OpenBB. I've gotten to know the people at OpenBB, and it allows me to tell a story using both quantitative and qualitative data. And today I won't be bringing this into it, but it also has a Copilot built into it, which means I can upload both the qualitative and the quantitative data, and I can have a conversation with a Copilot, which is what I had always wanted. I think it's going to take a long time for other softwares to be able to do that. So hopefully after this, you have a better appreciation for why Bitcoin now, and why some of the things that are going on this year have taken us to a point where I think it's fairly obvious of an acceleration that's happening, and more for the people who are continuously worried about it. And just to start, every time that you hear someone speak about Bitcoin, it usually comes from a zealot perspective. That's not what this is about. I'm just highlighting the facts of what I've seen, and that's led me to believe in this long term. The one person that I will mention, for those of you who want to listen to historians on this and who speak in a way that resonates as a macro person, I will say listening to Michael Saylor is a great way to embrace kind of the story. So let's just start through it. This is the 5-year chart of Bitcoin. I'm really not going to say anything. I'm bringing this up because I'll reference it over the course of time. But for chapter 1, I'm going to really focus on this debate and really getting into this concept that Noah Yuval Harari brought up in Sapiens, one of the most acclaimed books of the century. And he talked about storytelling. And it's really important for people when they doubt Bitcoin to realize that what I'm going to talk with the debate is how intelligent people just won't buy into the story. And that is important because gradually I think people are buying into the story. And part of the story that I'm going to take you through is that this is not a United States of America story. I highlighted 2 people here, both of whom I respect. Charlie Munger recently died. But for those people in the industry, Charlie Munger's wisdom over the years for investing, but everything, is incredibly well respected. I've read multiple books and quotes by him and used them in my papers, but I've also used Marc Andreessen's quotes from his viewpoint of technology. And the Charlie Munger thing just here, in terms of how much he hated until the day he died Bitcoin, and would constantly get asked about it and would constantly criticize it. At the same time, Marc Andreessen on the other side said a long time ago, I think this was in 2014. These are all quotes. So as I go through this, you can go look this up in the internet yourself. Go do a Google search. Go to Perplexity. Look it up. You can go read the article yourself. But 2 things about this. Marc Andreessen said Bitcoin today is the internet in 1994. That was 2014, I believe. And then he said, in 20 years, we'll talk about Bitcoin like we talked about the internet today. So those two people represent to me the either people hate Bitcoin, they're typically on the older side, they typically have not spent the time in the research, and I'm trying to speed that up. I'm really, as part of the consulting role that I'll be doing, I'm already spending time with larger allocators to hopefully be able to tell this story to them in a different way from just this. But this is part of what I want to get across to people, is just how powerful the story of Bitcoin is, and make sure that the 15-year history, which where we are right now, this was born basically as an idea in 2008, just after Lehman. We're now going to be hitting the 16-year anniversary of the Bitcoin white paper. It has become a brand, and that's what Chapter 2 is about. And the person who recently said that was Stan Druckenmiller, and he basically said at the end of 2023 that he probably should own. He talked about it as a brand. It had been around, and one of the things he said, this is when he was being interviewed by Paul Tudor Jones, who also obviously is backing it for different reasons. He's backing gold and Bitcoin for geopolitical reasons, but Paul and I have talked about it in the past, and he is a big believer in it long term. But what Stan said is, I'm 70 years old and I own gold. I was surprised that Bitcoin got going, but it's clear that the young people look at it as a store of value because it's a lot easier to do stuff with. And this gets really important because there is a demographic issue that I want to make sure people know. But for Stan to say it's now a brand, when something becomes a brand, it means it's accomplished things. This is no longer something to talk about like you did as a speculative asset, that it's only for money laundering and for people to hide money. Here it is in terms of top assets in the world. This is this year, Bitcoin and this is before it's over at 1.2 trillion now. It's still around the same number, right around the 10. But you can see where it is on a list of items here. So just from the ability of it to continue to grow, that's happened. Over the last year, as we've talked about the Magnificent Seven having a huge run and dominating the markets, I just wanted to put this up. This is performance from a year ago, from August 23rd to August 29th. The white line here is Bitcoin. It's up 127% from a year ago last summer. What's included in here is you have gold, which gets a lot of press for going higher. It's actually up 31%. You have the S&P, which was up 28%. And then you have IG, which is up 11%. And then you have the Treasury market, represented by the 20 plus, that's up 7%. So it's outperformed everything significantly, and we're talking about mega cap tech. And just to highlight how correlated it's been to mega cap tech and not speculative tech, which is where it gets grouped a lot of times, this is the white line here is Bitcoin, the red line here is SPY, the purple line here is QQQs. So it has been very correlated over the 5 years. This is going back before COVID, you can see. So it has continued to move, and it's sitting near all-time highs. The reason I brought these green line and blue lines is just to show what speculative tech has done. So if you think of it as a VC play, if you think of it as Coinbase, if you think it is anything that's in there, this here is the ARK. This is the innovation ETF, the Cathie Wood Innovation ETF, which is obviously off significantly from where it was here. And then this is KWEB. So this is dominated by the mega tech names in China. They've underperformed. Now, this is the 10-year look, and this goes back to the Marc Andreessen quote. This is showing what Bitcoin has done compared to Amazon, Apple, Google, and Meta. So as you're looking at everything in here, I just want you to think about, Marc Andreessen said we will look back and think of us in the same way as we did the internet. I'm going to have some other quotes here which are going to get a little bit more specific into those companies as we get to the end of this. Now, I also want to show it for the asset allocators, and these is where I'm doing a lot of the presentations. In that paper at the end of December, I talked about a 50-30-20 investment thesis for Bitcoin. This was on my belief, and you're hearing me, I'm not talking about cryptocurrencies. I am talking about Bitcoin, which to me is the S&P 500 of the crypto economy. I won't be talking about other things here except for a couple charts as I get into the very end. But this is an asset allocation side, and what I wanted to compare it to is the BlackRock 60-40 ETF or fund that's listed. And so the red line here is the 60-40 fund. So what the green line in here is if you made a 20% allocation to Bitcoin and then 60-40 of the fiat world, as I quote it, made up the rest. This one here is with 10% Bitcoin. This here is with 5%. You can see it over time. And basically, there was a point here during the inflation panic when stocks were going down and bonds were going down that 60-40 for volatility reasons stay below. But the main reason I'm showing this is for people that are scared of it, just by moving 2%, 3%, the yellow line here is 5%. It is very correlated 60-40 because you're talking about only 5%. The argument I made in the December paper was allocating for 50% money markets, 30% of what would effectively be the fiat asset 60-40, so 30% of a 60-40, and then 20% of Bitcoin. That is what I believe will enable you over future to outperform and get your double digits. Now, this is a chart back to 2020. I just want to show how consistent an asset allocation is. This is, if you look at from 2021 on, you're still, all of them are outperforming no matter what your weighting is. If you started in 2022 during the inflation year, you can see that yes, it is riskier. So all of the allocations were doing worse during a period that it went down. But the more time that you have, the catch up comes. And by the end of now, since 2022, again, you're outperforming in all of them. So as long as you have the time, you're fine. In the case of this one, it's a significant outperformance over the last, since 2023. You're talking about on a 20% allocation, you're talking about over a 20% outperformance of the 60-40. Now, when you're looking past the quantitative data of what's happened in performance, one of the most important things is just the growth in owners. And I think this was the most important story in 2022, is you had growth in owners even during a horrific bear market with headline collapses. I'm going to go through some of that, but you had growth. And now here we are, this is through 2023. You went over that year from 430 up to here, so you had growth rate of about 40%. We are still growing rapidly, and we are continuing to move on the internet adoption timeline. So remember what Marc Andreessen said, looking back, and he said it here, looking back over a decade, you're going to look back at this just like you did the internet from the adoption perspective. And he's been right. And I still believe this is continuing to go. When you're looking at the countries, one of the most important stories that will come across in this is the side of decentralization. This is not a United States of America story. This is actually showing the ownership around the globe in terms of highest ownership rate. And what you see right off the bat is the UAE leads. I just want to highlight one here for the future, which is the fourth one on this list at about 19% ownership rate is Argentina. I'm going to talk more about Argentina at the end. I want to bring up again what happened in 2022. Again, you can pause this. You guys can go get these from anywhere. But this is a recap of how brutal 2022 was in terms of there was a bubble in 2021. You finally made a peak, you started to go down, but then we had the collapse of Terra Luna, we had the collapse of FTX, you had all these celebrities that lost money, you had Ripple, you had so many things that happened in 2022, and at the same point, that was also the year that NFTs, which everyone had talked about and was a bubble, 95% of them dropped to zero market value. Now this is in May of 2024. They haven't bounced. So when I showed you the chart of ARK and KWeb, which are down significantly and have not bounced. If you spend time on the privates and you go back to look at a lot of those software companies, a lot of things that didn't come to the market, the majority of them have not bounced. And what you're talking about is a write down anywhere 70, 90%. Well, NFTs had the same thing. And at the same point, when we made all-time highs here, when speculation was running high in 17, 18, you had volumes exploding. When we did it again during part of the COVID shutdown, we had volumes exploding. As we approached and made new all-time highs this year, we don't have volume exploding. So this one is actually, from a macro, the way I look at things, I love seeing new all-time highs happening without exploding volume, without speculation. People are worried about it. I know more people that have sold their Bitcoin over the course of the last 3 years that got in at some point and never bought back in than the people who actually went the other direction and are buying it now. Now, in terms of, I brought this chart up once. This again is Bitcoin, just showing the correlation between the mega cap tech. So this is Amazon, Apple, Google, Meta. All I want to make sure you understand is this is it normalized back to when Marc Andreessen said. So again, you're dealing with this. These are the percentage moves of this, dramatically outperforming Amazon, Apple, Google, Meta. So this has been, a decade of Bitcoin just continuing to be viewed as a stable tech name. And despite all the things I talked about, it's being treated like a mega cap tech name. It shows up on the valuation list. It is an innovation. It is a technology. I'll go through this as we go through the end. Now, this is a Michael Saylor thing. And as you can see, I created all of these little chapter things very quickly. I asked ChatGPT to, so there's little errors all over the place. I think it makes it look a little cooler to have this stuff as opposed to make it professional. But you can see all of the quote here, Bitcoin changes you. This is a Michael Saylor quote where he basically was implying that you can sit there and not like it, but eventually it will get you to change. You don't change. And I think there's a lot of truth in that. And I think as I show you some of the people that have flipped, I think the reason they flipped is because they've had to. Larry Fink obviously has had to, but just a reminder, back before the ETF launch, way before, he said it was an index of money laundering, and then eventually he's supporting it and is completely on board. Howard Marks, one of my favorite people to read, and I think one of everyone's favorite people to read. He said it was said it's a pyramid scheme, said it was a bubble, has no idea what's behind it, doesn't make any sense. And then more recently, and this isn't even today, he started to turn on it and say he could understand at least where it is to gold. Jumping to one that's probably more on the tech side and more important right now, Mark Cuban even said famously he'd rather have bananas than Bitcoin because they're more useful. Well, he's completely changed now and has become part of the thing, part of the people talking about Bitcoin possibly being a global reserve asset, which obviously got a lot more, let's say, stories about it as Trump attended a Bitcoin event back in July. So you've got Mark Cuban that's turned, but more importantly, Cuban only opened up the door as to what's been happening in politics. And I think the biggest pushback on Bitcoin, aside from not understanding it, was that eventually the government would bail out or save people who were bearish, meaning they didn't have to join into it because it would be regulated, it would be restricted like it has been in China and other countries that went through it this way. But this year, it has been more of a story, and as is the case in democracy, and as in the case of kind of if something grows and the voters of the country, if there's enough people that care about it, that's another reason for people to stop fading it. And the politics have become very, very clear this year. So you started to see people say that crypto voters could determine a close election. If you haven't followed this, Fairshake, which is a super PAC, has been involved in a major way in Senate races this year, in particular going against any candidates that are connected to Elizabeth Warren. This is the record it had, and this was through June 26th. There's been more wins, so it's putting its money towards candidates that, again, are on an impact going against not only crypto, but focusing on people that are going down more of a let's say, a path that is more on the socialist side. In terms of just how much money and how they're influencing elections, it's just, again, it matches the market cap. There's a lot of dollars being thrown in, and you can read and hear the crypto corporations and how much money they're directly putting into federal elections. This is how you become something that's relevant, and this is how the candidates start. Donald Trump flips on crypto, called it a scam. Now he's building a crypto army. You can go donate in crypto on his website. Reluctantly, Kamala Harris is supporting policies to expand the crypto industry. So you're getting more of a bipartisan, and even RFK made some headlines when before he stepped out, said he wanted it to be part of the reserve and even gave a specific number. More importantly, and if you haven't seen this, go read these stories on your own. But there were two very important bipartisan issues that Congress passed on crypto this year. One of them was the FIT 121 bill. And again, you can go read these on your own. I think they're important. But the main thing is, if you can find something anything that is bipartisan in this country, it's usually a decent thing to invest in and just to follow. And in this case, you're starting to get both sides reeling. They have to support this. In terms of Paul Ryan, if you remember Paul Ryan, he actually put an op-ed in June talking about how crypto could stave off a U.S. debt crisis. One of the most important things is the U.S. national debt hit $35 trillion, I believe, this week. That means there's per citizen, there's over $100,000 of debt per citizen. That's with median income somewhere around $75,000. That crossover point happened in the last 5 years. The amount of money that was spent during COVID and where that's led us as a debt at a debt problem, where the budget estimates for the next decade are going to be spending. All of this, to me, will bring out more of the people that believe that crypto is an offsetting side. I'm going to talk more about this stuff as I get into some of the global issues. But I think you just have to start paying attention to the fact that everything that I've shown you so far in terms of the outperformance, this happened without the government on its side. This happened without the debt being the size as it is, and it happened on this side with FASB making a very, very big shift at the end of last year in terms of how it's going to handle crypto assets. And this is important for what Michael Saylor has done at MicroStrategy, which is leading to more and more corporates that are thinking about including crypto as part of their treasury. And the reason is because they're now going to be held at fair value. I would go read this story and go spend some time on it. It takes effect in December of this year. So you're going to have more opportunity for people to buy it in their treasury. And you've already seen it not only in the US, but it's happened in Japan this year. You're getting more and more corporations which are looking into it. And this is where I'm going to start to shift into this theme, which is, are we going to get more institutional buyers? Are the bridges being built for institutions to buy this, where historically, until this year, it had mainly been retail? And this is where, as you go through, I just want to remind you where we were in October of 23, because one of the things I highlighted how crypto has or how Bitcoin has come back despite having a collapse in 2022 and is already at all-time highs. If you go back to the dot-com bubble and think about how long it took for the NASDAQ to come out of that bubble in 2000, and the fact that Bitcoin did it in a matter of months as opposed to years, you think about where we were in October of last year. Normally, when you have Bitcoin soaring, after we're speculating on an ETF approval. Once the ETF approval happens, which is in January, you would expect to sell the news event. And despite that, as I'm going to show, by March of 2024, the first trading day, we saw lots of volume trading. We got a little bit of weakness in January, but we hit new all-time highs again by March of 2024. At the same time, shares are just growing. So we're getting more and more buyers which are popping up. You've got the shares outstanding on, that was the BlackRock ETF. BlackRock came out after they had gone out and said, sovereign wealth pension funds considering to buy ETFs. This is all this year's news. And then what happens? Wisconsin Pension Fund includes Bitcoin. Norway owns Bitcoin in terms of the sovereign wealth fund. In March, GPIF, the second or the largest, depending on the month you're talking about, pension fund in the world with over $1 trillion assets, set up a group to decide whether they want to buy it. So they're looking into this situation. Again, remember, you don't change on Bitcoin, Bitcoin changes you. Anything that's working, you have to look at. And so as part of this, if something is working, you're going to start to get more buyers. In terms of thinking about it from a treasury perspective, I just wanted to highlight that Fidelity on their digital asset page has a education thing on this, and this is just the confirmation that it's becoming an essential asset for corporate treasuries. And again, when you have debt at this level, and you have interest rates at this level, and you have GDP, nominal GDP slowing, I really do believe when you go back and listen to why Michael Saylor did this in 2020, why he decided to get in the habit of issuing fiat assets to buy Bitcoin, That's what I was writing about, is I believe that this is going to happen more and more because you're able to outperform not only inflation with it historically, but you've been able to outperform interest rates. And it is a way to add in an asset allocation perspective. If you're just owning treasuries, which are yielding on 10-year rates still below where inflation is right now, you're sitting with a decaying asset in terms of what it's doing for you. So this is just something to keep on top of. Stable coins. The last time for many of you heard about stable coins was when all of these collapses were going on back in 2022. But stablecoin is another bridge, and you should really spend time on it. And I'm not going to spend a lot of time because this is a crypto one, but I do want you to understand that stable coins are an important component for getting people comfortable, particularly around the globe, with the transferring from the fiat system into the crypto system. But then also, in my opinion, this allows, not my opinion, it's a fact, this is going to bring more money into the digital payment side. So when I hear people say there's no way you can use crypto or specifically Bitcoin to pay for things, A, that's not true. It may not be there for you now. But secondly, the more that stable coins grow, and when I say grow, stablecoin companies now combined are the 16th largest holder of U.S. Treasuries globally. It's an unbelievable statistic. It's happening. We're moving up the ladder. And as the rest of sovereign wealth funds are reducing their treasury holdings and stable coins are growing, I think this is going to become a much, much bigger story as we go through. And here's the transfer side. PayPal, stable coin, and think about what PayPal is involved with paying. So for consumer payments and things along those lines, it becomes an important thing. Digital wallets, which are already going on, particularly since COVID. Digital wallets to overtake debit cards in stores. 5 reasons digital wallets are essential for your large enterprise. State of Wyoming, which is really the state home of crypto in terms of regulation, with Senator Cynthia Lummis, I believe her name is. They're launching their own stablecoin for faster and cheaper consumer payments. Cash use falls as instant payments gain ground. This is a big McKinsey report talking about the growth, the unstoppable rise of digital wallets, and then the overtake debit cards. The reason I'm showing all these news items, and again, you can go read them on your own, this is happening in every aspect this year. It's not just Bitcoin's going higher. Under the surface, the ecosystem of the crypto economy is growing, and it happens at a time when speculation and volume are down when measured by NFT and volumes in Bitcoin. You actually have institutional adoption going on, government acceptance. This is a major, major change. Now, one thing I just want to bring up, because this is something that I will be doing more videos on, I believe AI will accelerate the need for crypto, but it's also in my opinion, a sibling of decentralization. So AI allows for more competition. For those of you who read 0 to 1 by Peter Thiel, he talks in there specifically about competition really hurting startup companies. It has never been easier for copying things and for catching up in this, and AI will allow for that. And so it will be a disruptive force, and I think crypto, which needs to be there in terms of the blockchain for authenticity, but is also part of this decentralization movement. I think they are siblings together, and I think if you believe in AI, as I've shown you with the mega cap tech names, crypto is an unknown player in this, and I think people should be involved. It has huge implications for all of the sovereign wealth funds and all of the global pension funds, because right now you are overweight the mega cap tech names, you're overweight the US. This is, as of July, the MSCI weightings around the globe. 72% is in the US. I believe with AI and crypto, this will go down, but if you want to think about ways to diversify, I think you should be reducing your equity holdings and increasing your crypto holdings. I think that is a way to protect against not only decentralization, but about the competition that's rising around the globe. This is already happening from the central banks. This is an IMF thing just showing that we are seeing de-dollarization. It's a massive trend. I think this also is a huge, huge positive for Bitcoin and for gold. As central banks are just reducing their dollars, you're seeing the trend. It's been defined for a while. You think about when Bitcoin came out, which was in here. Think about what's happened on these. It's just been consistent. You can see it better on this chart. in looking at what's happened to the reserves around the globe. And rather than figure out where most of the money's gone, because it's been kind of distributed in a manner where there's not much growth, it's really more that the U.S. has peaked since 2017. So you are finally starting to see global reserves come down. In terms of gold holdings, again, Bitcoin comes out and you've seen a continuous trend in terms of gold holdings as reserve assets. One of the most powerful stories supporting crypto going forward is the demographics and the transfer of wealth. And this is an important story which has to be shown for those of you who've not seen it. Distribution of U.S. household wealth. Now globally, Michael Saylor has covered this well. I've talked about it on podcasts. There's a half a quadrillion dollars around the globe in household net worth. And most of that is very similar to this, which is owned by, this is the percentage of ownership, which is the baby boomers and the silent generation. So you're dealing with the youngest baby boomer now was born in 64. So you're dealing with anyone above the age of 60 controls about 70% of the global money. Then you've got the Gen X, which is here, and then this little thing here is the millennials. Well, in terms of which generation has adopted to crypto, this is no different than AI, and this is no different than TikTok. So whenever I read things like Charlie Munger, who was in his 90s before he died, doesn't understand crypto, or I hear Warren Buffett, there's an age factor. And I think Stan Druckenmiller, who's 70, who's a macro person who's thinking about them and accepts the fact that it's a brand, he talks about it, young people believe in it. And that's really all this is. It's something is worth what other people will buy for it. And the millennials and the Gen Zers are controlling this side. And so we showed it on the other side. You're going to have a transfer of wealth that's happening. And E&Y just put out a big report in May on this. And they're saying that this year alone, there will be $2 and $3 trillion will be inherited globally this year. If you go through this around the globe and you read some of these reports, now you're getting to the point where more billionaires were created around the world through inheritance than from running businesses. As this money is spread out, and yes, a lot of it's going to go to Gen X, which has a higher percentage of ownership than the baby boomers, but normally the grandparents are giving a lot of money to the millennials as well. So you're going to have this money shift that's happening. It has a positive impact because the way that the younger people view this is that crypto is a digital capital, as Michael Saylor says. He calls it digital capital, not digital money, and I agree with him. In terms of sentiment, which is another macro tool to use, here's where crypto is. So they included cryptocurrencies in here. It's down at 3.5%, and you can see best long-term investments. Even though it has outperformed every single asset class, not by a little, by a ton, it is not loved by people yet. This is a Gallup poll, which means it's in the U.S. Does not surprise me because people have been making money on those. I believe the mega cap tech names have probably hit their massive outperformance peak because I think we've hit the peak in the AI bubble, and I think revenues need to come through. If that's right, over the next year, if stocks were to go sideways or to lose their edge, or the tech names are no longer there, I don't know what the story is going to be. People are not going to get enthusiastic about buying Ford as a value trade or other names which are value trades. I think they want an idea, and so I'm trying to present a macro reason for owning this. This will be the final little bit here, and I just want to make sure you get a chance to see this. So this is going to go into a macro trade of just if you didn't want to trade crypto, or if you're looking for an offshoot, which people normally are. I just want to bring something up. Michael Saylor said this in a podcast I listened to. I just want to make sure when you guys read it. I lived in Brazil. I'm going to talk about that a little bit. That's where this is going to go, not specifically to Brazil, but to my 2 years in emerging markets, which was during 1997, 98 into the beginning of 99 during the EM crisis. I learned a lot living for a brief period of time in Hong Kong, living in Brazil and traveling throughout South America. It gave me a different perspective on what it's like to live in a country where Michael Saylor says if you lose faith in banks, they lose faith in the currency. When they lose faith in the currency, they lose faith in the government. When you lose faith in the bank, the currency, and the government, someone says, who can you trust? The answer is Bitcoin. The reason this is important for the story is I moved to Brazil in 1997. 30 years ago was 1994. That's when the Real plan was put into place. In the years before that, when I got there, I heard all the stories about what had happened in the late 80s and the early 90s. The government had seized bank accounts. You had hyperinflation. Milk prices were changing multiple times a day. It was a concept that was impossible to think about as an American. And EM has suffered because of these. And when I watch the history and I realize, well, for this to get stable, it's probably going to take multiple generations. I think crypto in particular is going to enable these countries, and this is where the offshoot is as to how I think emerging markets are going to benefit and why the time is now. Just spend time looking at these. I'm not going to go read them. I bring this up because Brazil and a lot of the emerging markets are already starting to get involved. Most people know about El Salvador because it was a story. This year, you're not hearing these because there's too many of them. The reason emerging markets have done so poorly over the last, well, not just 4 years, but let's just take the last 4 years. From 2019 on, this is the rankings of currencies around the globe. I just want you to focus on the bottom here. And in particular, you've got Ethiopia, you've got Suriname, you've got Nigeria, Turkey, Argentina, Lebanon. These numbers are unbelievable in terms of how much has been lost. In the case of Argentina, 94%. Now, if you go to EM and you take some of those countries, Turkish citizens seek refuge in gold and stablecoins. So stablecoins are brought up. Argentina is a record cryptocurrency adopter. Bitcoin to the rescue. Suriname's next president vision. Crypto in Nigeria, surge in adoption. These countries, again, the Michael Saylor argument, you don't change on Bitcoin, Bitcoin changes you. These countries have been looking for solutions for a long time. Stablecoins, to me, to give everyone who's a macro person some kind of context, who's been around for a while, I view stablecoins as very similar to the Brady bonds. The Brady bonds were necessary to have a stable asset attached to it, in that case the dollar. Stable coins are attaching a stable currency to the crypto side, and so that's why you hear stable coins brought up. Now, here's the chart of the correlation right now between EEM and Bitcoin. So I think the orange line here, and again, this has a lot of China in it, which does not have the currency situation as crypto, but regardless, I think if I were gonna look into something, I would look investing in emerging market countries that are probably going through this adoption phase, that are probably at a point where they have to do something draconian. And that leads into something that happened this year. New President Milei of Argentina gave a speech that went viral at Davos this year in January. And after it, on an interview, Stan Druckenmiller was interviewed and said that he had purchased, I believe, 5 ADRs in Argentina. And he said the reason is because he heard what he said, and this is what you're getting in. He praised the presentation. And regardless of the politics involved and everything else, this is not about this. This is about, would you invest in Argentina if someone didn't come up and make a drastic change? Now, the reason Argentina to me is so interesting, and I think the reason that as a macro person, when I heard Stan talk about it and then I put it in the context of crypto and I started doing my research, I believed it was an interesting story because what people don't know, if you haven't been to Buenos Aires, the history of Argentina is one of the more interesting of the developed countries. Just like Brazil is interesting in the fact that it's a big country. It hosted the Olympics. It had hyperinflation and had their bank accounts seized in 1989 and 1990. Argentina was one of the largest or one of the wealthiest economies in the world in the early 20th century, so up until 1920. Buenos Aires has been called the Paris of South America. It's a beautiful city, despite the fact that since I lived in Brazil, it has not been able to get out of itself. But what's happening in Argentina is actually amazing, and it's one of the more interesting things because if any country which has smart people in the industry, I've known many Argentine traders throughout my days. They were some of the more sophisticated ones in the world, along with the Brazilians. And so what's happening there, they have a huge movement into cryptocurrency. Milei has been talked about as a Bitcoin president. But more importantly, as you go through this, South America in general surpasses Europe in cryptocurrency users. They are embracing it. I believe it's going to have a huge impact on stability there. Here's just some more stories in terms of what's happened. If you haven't paid attention to, and actually I'm going to bring it up now, Aleph. It's a very interesting story. I would go read about it. David Hoffman just wrote this. Actually, this came out 2 days ago. I was listening to a podcast from Bankless on it. Very interesting to listen to entrepreneurs there and to see the growth they're happening. And this is coming from a regulator. They've got people on. Malay brought on Sergio Morales, who has a background in the blockchain. There is behind the scenes something very powerful going on. And like I said, rather than focus on it from a way that's negative, I would just say, as Michael Saylor, I'm going to finish up with him, you don't change on Bitcoin, Bitcoin changes you. So Michael Saylor, I'm just giving him the final shout out because I've listened to probably 15 of his podcasts. The one I would highly recommend the most to everyone is one he did with Peter Diamandis in April. I believe it was at the Abundance Conference. It was about an hour and 20 minutes. If you just type in Peter Diamandis, who is really the person I follow on Abundance, and Michael Saylor, you'll get it. So this is my first attempt. Big shout out to Didier and the team at OpenBB. I'll be using it a lot going forward. I spent a lot of the last 2 months with AI and then eventually with and Python and then eventually with OpenBB. It will be a tool that will enable me to tell a story going forward. So I look forward to hearing from you guys. If anyone has any questions or would like anything else on this, don't hesitate to reach out in the YouTube channel. And remember to subscribe, and thanks again.